All right, well, good evening and welcome everyone. I'm seeing as people connect via audio. Welcome. Thank you for joining us this evening for tonight's presentation. My name is Michael Good and I'm the Director of School Support for the New York Charter Schools Association. I want to welcome everyone to this evening's webinar, which is on the federal single audit. We are really glad here at the association to be hosting this information session for you all. And as I look through the attendees list, I'm very excited to see many of our New York charter school leaders, but also gratified to see representatives from charter schools outside of New York. As this is a topic that has impact for all schools, no matter the state, since it pertains to federal forms of reporting, I'm glad that we can provide that resource here at the New York Charter Schools Association to all of you. So without further ado, I'm going to hand things over to our expert presenters for today. And so let me go ahead and introduce Lola Barbarash to kick us off. Lola.
Thank you. Good evening, everyone, and welcome to the presentation on how to prepare for a single audit. The goal of the presentation is to provide guidance on how do you prepare, how do you manage, and how do you pass a single audit with hopefully no findings. A lot of schools receive new funding, federal funding. It's a huge allocation. Some of it is multi-years. For some schools, this is going to be a first time going through a single audit, and for some others, it might be from a long time ago. This single audit will probably start happening this year and a couple of years in the future. So in collaboration with Michelle Kane from Mengel Metzger Bar and Company, Gus Saliba and Dan Smolin from PKF O'Connor Davies, Tia Murphy and myself, Lola Barbarash from Charter School Business Management, will be presenting on what is a single audit? How do you plan for a single audit? What happens once the audit starts? What is tested during this audit? Some of the problem areas that we've seen in the past couple of years, and also best practices. We have a lot to cover. The presentation has a lot of information. We will be sharing it at the end of the webinar along with the recording. Please post all your comments, your questions. We will have a Q&A session at the end of this presentation. And thank you, and passing it on to Michelle.
Thanks, Lola. Good afternoon, everybody. Happy to be here. So I'm going to talk about what a single audit is. And yeah, what is it? What is a single audit? So it's an organization-wide financial statement and federal awards audit of a non-federal entity, which is all of you, that expends $750,000 or more in federal funds in any given year. It's intended to provide assurance to the federal government that organizations have adequate internal controls and generally comply with the program requirements. You may have heard the term A133 audit in the past. So that used to be the terminology. It was referring to OMB Circular A133, following the cost principles of Circular A133. The most recent guidance, however, is in the uniform guidance that was issued by the OMB, or the Office of Management and Budget. So the Single Audit Act Amendment of 1996 was enacted, or the Single Audit Act, to streamline and improve the effectiveness of audits of federal awards, as well as to reduce the burden. So think about this. So it's called a single audit because the federal agencies could require a separate program audit for every one of their programs. But instead of doing that, they want to pull it all into one single audit. And it's going to eliminate unnecessary duplication of audit and financial reporting, which of course reduces compliance costs to you as an organization. So that's what the single audit is all about. They also wanted to develop a central location for entities to submit all of their information electronically. And we'll get to that in just a moment. That's called the Federal Audit Clearinghouse. So single audits have two main components. The first is an audit of the financial statement under generally accepted auditing standards. And that's what you're used to, the typical financial statement audit. But the second component of single audits is an audit of the federal awards. So what happens during a single audit? Well, the auditors will start testing and documenting a lot of different things. So it encompasses an examination of your financial records, your financial statements, the federal award transactions and expenditures, the general management of your operations, the internal control systems, and the federal assistance that you received during the audit period. So the auditors encompass both financial and compliance components. Compliance and internal controls over compliance are tested. The compliance supplement is a guide that the auditors use. It is issued through the uniform guidance, and it lists all the programs with the applicable compliance requirements. I just want you to know that this compliance supplement is a public document. I would encourage you to look at it, take a look at the programs that relate to you, and then you'll know and you won't be surprised at what the auditors are looking at and trying to test. So once the auditors go through all their testing and documentation, which I will tell you is a lot of information, a single audit report package is issued, and I'll get into that package in just a moment. And once the single audit report is issued, a data collection form is prepared. I would encourage you to communicate with your auditors as to who is going to prepare that data collection form. I can tell you that we typically prepare them for our clients, but once it's prepared, it needs to be certified by both auditee and auditor and then submitted to the Federal Audit Clearinghouse. And that's where all of that data is accumulated and stored. There is a deadline for the data collection form. It is the earlier of 30 days after that single audit reporting package is issued or 9 months after year end. Now, keeping in mind, with many of the states have deadlines where they want all of their reports submitted, including the single audit report. So if that deadline, for instance, in New York State is November 1st, that 9 months after year end is not going to apply to you. That's going to be too late. So you're really going to go with the 30 days after that report is issued. So what's included in that single audit reporting package? Well, there's 2 reports that the auditors issue. And when you look at that reporting package, each one of those reports is about 2 pages long. So there's a lot of words there. But the first one is on internal controls over financial reporting and on compliance. The second one is on compliance and internal control over compliance of the major federal programs. Then you'll see the schedule of expenditures of federal awards, often referred to as the CFA. Please keep in mind that the CFA is to be prepared by you, by your organization. That CFA is then used by the auditors to determine what is tested and what is audited. Then there's a schedule of findings and question costs, and you'll see that it's a nice summary of everything that's documented in those first 2 auditor reports. And if there are findings, there is a corrective action plan that is required. Again, the responsibility of the organization being audited. So I want to show you an example. This is an example of a CFA. As you'll see here, it lists all of the federal programs. It will list the federal agency that the funding is coming from, for instance, the U.S. Department of Education. It will list any pass-through entities. So in this case, the funds were passed through the New York State Department of Education. It will list the federal AL or assistance listing number that used to be referred to as the CFDA number, but they changed the terminology there. It shows you the pass-through grantor number, and it shows you the total federal expenditures. And you see that total all programs number, in this case, 2.5 million. If that number on your CFA is $750,000 or more, that's when a single audit is required. The next example is a schedule of findings and question costs. And as I mentioned, this is a nice summary of the auditor's results. I'd say I break this out into 3 different sections. The first section is on financial statements. It tells the reader what opinion was issued on the financial statements themselves. It tells the reader if there were any material weaknesses or significant deficiencies in internal controls over financial reporting, and if there were any non-compliance matters. The second section goes into federal awards, again, telling the reader if there were any material weaknesses or significant deficiencies identified in internal controls over federal awards, the type of report that was issued on compliance over federal awards, and of course, any findings. And the third section at the bottom tells the reader some information about how the auditors determined what to test. The first is the identification of the major federal award program or programs. In this case, it happened to be the ESSER funding. The total dollar threshold that distinguishes a type A and type B program, and I'll get to that definition in just a minute, and whether the auditee qualifies as a low-risk auditee. And then the second page of the schedule of findings will list the findings. If there are findings, there are several components that have to be listed. If there are no findings, it will look like this. And again, if there are findings, it is the organization's responsibility to prepare a corrective action plan, and that gets submitted with the single audit reporting package. I will mention, you will not see it in these slides, but you will see it in the PDF version of the materials. I did include some definitions of what a deficiency is, what a material weakness is, and what a significant deficiency is, just so you can understand what those mean and what they all relate to. So how do we as auditors determine what we're going to test? So the first thing we have to do is determine if the entity qualifies as a low-risk auditee. And the only way you can qualify as a low-risk auditee is if you meet every one of these bullet points for each of the preceding 2 years. Okay, so don't be alarmed if your report says that you are not a low-risk auditee, because you can't be in the first 2 years. So year 1 and year 2, you're automatically not a low-risk auditee. You have to have a single audit for 2 years with basically no findings to end up in that category. And all that means is it's more or less testing that the auditors have to do. So if you're a low-risk auditee, a minimum of 20% has to be tested. And if you're not, a minimum of 40% has to be tested. And so then how do we determine which programs to test? Well, we have to separate the programs into type A and B programs. And for most organizations that are on this call, it's going to be $750,000. So that's what distinguishes A and B. So if you have a program that has $750,000 or more of federal expenditures, it's a type A program. The auditors will then assess risk on those programs. If they're a high risk type A, it's going to be tested. If it's a low risk type A, it will be set aside. And then the type B programs, the ones that are less than 750, will be assessed. And possibly a type B high risk will substitute a type A low risk in general terms. Ultimately, that testing coverage must be obtained. And so with that, I will hand it over to Gus to talk about planning for a single audit.
Thanks, Michelle. You kept it under 10 minutes. That's impressive. I'll try to do the same. But I'm going to talk about planning for the single audit. And again, planning is really the key here, especially if you're a school that's going through the single audit for the first time. So I'll talk about responsibilities, some internal controls that are that relate to a single audit, the documentation needed, and just a little bit about the COVID-19 funding and just the impact of COVID-19. So, again, planning is a real key to getting this done in a timely manner. We usually go through our planning meetings with the clients sometime in March or April. We will discuss a single audit. If a client is close to a single audit, we'll follow up with them to see if they've actually reached the $750,000 threshold. If you're going through this for the first time, again, ask your auditors at that planning meeting, what documents do we need? What programs will be tested? Sometimes they'll know, sometimes we wouldn't know. Some of the programs are, we will easily know because of the dollar amount, and some we would have to wait until we start the audit. But some of the internal control stuff could be done prior to that, regardless of the program. So, having said that, we'll get into some of the management's responsibilities, and you'll hear this a lot probably throughout this presentation. Preparing a CFA is management's responsibility, preparing it accurately and completely. So, again, our firm will communicate this along with other firms in our planning documents when we send to the board and to management. If it's not prepared accurately, it could result in a deficiency. A lot of it depends on the auditor's judgment and all that. So again, please be sure to have this completed accurately and completely. Some of the amounts on the CFA should be reconciled to the trial balance. Most of our schools are on an accrual basis, and our schools will work, since they're on an accrual basis, most of our federal programs are cost reimbursement grants, like Title, CSP. That just means that revenue is recorded when expenses are tagged and allocated to that particular grant. So again, a key here too is really the revenue reconciliations. It creates a lot of problems if this is not completed. If it's not done accurately, it really creates a lot of problems for us. As Michelle mentioned earlier, we're determining which program to use. If you give us a reconciliation, you give us a CFA, the revenue changes, it could change the coverage on that, whether you're a low risk or a high risk. It could change the type of program, whether you're a type A or type B. So really very important to get these correct from the beginning. Some of the federal programs that are not included on the CFA, again, are IDEA, B-rate, the PPP, forgiveness that is recorded as a revenue item, and also the coronavirus relief fund, and I'll discuss that a little later. But just be aware for the New York schools, there is a New York State Education Department audit guide that's all listed in there as well. I just want to briefly talk about the replication and expansion grants for CMOs. Just be aware that the same dollar amounts that are going through the CMO, whether they're, if they're passed down to the education corporations, which are the actual charter schools, that same dollar amount is recorded on both the CMO books, on the CMO CFA, and on the charter school CFA as well. We go to the next page. Management's responsibility, again, under the single audit, the government's giving you money. The government expects you to know the laws and regulations, how these programs work. So they want you to know that. I know Dan will get into some more detail about what's allowable cost, what's the reporting requirements and things like that when he does his presentation. Again, if you're not sure about something, reach out to the federal awarding agency, reach out to the state education department, back office providers like CSPM and ourselves. Let's get these issues resolved if there's any issues before we start the audit, preferably during the planning meetings. Again, let's talk about internal control. You go through internal controls when you do the financial statement audit. Same goes through with the federal, with a single audit and the federal programs. What we usually do as auditors, and I know Michelle and other auditors do as well, we circulate a questionnaire or a spreadsheet to clients to complete. That includes the control environment, includes the risk assessment, activities, monitoring, and so on. Some of the biggest things, I'm not going to get into every one of them, but some of the biggest things here that we're seeing that could be issues for schools is the time and effort reports, the second bullet point. We want to look at, for example, teacher certifications for Title I. We want to look at timesheets, things like that. The next bullet point has to do with cash management. If you're drawing down, are you expending that within a certain amount of time? If you're purchasing property and equipment, are you taking inventory according to federal guidelines every 2 years? You should be taking that. And again, it's important here to look at the overall picture. It's not just, you're meeting the federal guidelines. Are you meeting your fiscal policies procedures manual? Because that could say something different. That could require you to take inventory every year or otherwise. So again, I just want to point something out too. What we've seen from our experience, the last bullet point, does your organization have a designated person in charge? I think this is real key, very important, I think, to have one person that's dealing with different departments and reporting back to the auditors, dealing with the finance, dealing with the grants people. So it's important to have one person to take responsibility and accountability. We've seen way too many times where 4 or 5 different people are taking pieces of it, and no one has responsibility. So it makes it real difficult, and it really it makes things go a lot slower. So again, what documents do we need? We talked about the CFA a lot. One of the things we can do is you can reach out to the auditors, reach out to CSBM or back office providers for a template. They're happy to give you a template. Here's what we're expecting the CFA to look like, and have you actually go through the template and fill it out yourselves. We need a narrative of how an organization CFA is prepared. What process do you use to prepare a CFA? Things like that. So again, internal control over compliance questionnaire. We talked about that earlier. Just be aware here that there could be more than one major program that's selected. If we happen to select for whatever reason, for coverage, for other reasons, whether they're higher risk, you need a internal control questionnaire for each program that's selected. So again, most of these will be the same. You may have to tweak some of them to accommodate that program. And again, the dollar amount received must be reviewed during the year to determine if single audit is needed. Again, the key is really planning. Look at that. Look at the expenditures, the federal expenditures 9 months into the year. If you really need a single audit, reach out to your auditors and ask them. That's a real key. Again, we mentioned this again, so we'll go to the next one. Again, more documentation. We look we want the grant tagging before we even start looking and selecting, certain expenditures for testing. We look for double dipping. That's a term that you've heard a lot. And that's really when you're using the same expense that's used for multiple grants. You can't do that. That's not allowed. So that's why we look at grant tagging. Most of our grant tagging is done within the software, which makes it pretty important and a lot easier for us to test. Supporting documentation for any costs. You should be prepared to have those, which you should have those anyway through the grant tagging. Again, when we're filling out, as Michelle mentioned earlier, when we're doing a data collection form, we need a DUNS number. DUNS number is required for organizations that are receiving federal grants. Have that prepared. We've seen way too many times where we're ready to certify the data collection form and there's no DUNS number and the client's struggling to get it. So be prepared with that. And also, as Michelle mentioned earlier, about prior year findings. And we as auditors are required to follow up. And if there's a deficiency, you have to follow up. You have to submit an action plan as to how you're going to resolve that issue. So be aware of that, during the interim period before the audit starts and make sure that's been corrected. And I just want to point out one other thing. If you do need a single audit, your auditors will give you a different engagement letter that includes language around a single audit. And, just be aware that there's additional fees involved in performing a single audit. I know I'm running low on time.
You have 2 minutes. 2 minutes. We'll give you 2 more minutes, Des, okay?
Thank you. So just a couple of things to talk about the single audit with the, as it relates to the pandemic. Most of our clients have done a great job of working remotely. They have gone paperless, or most of them started to go paperless before the pandemic started. Most of the accounting software is in the cloud, on a cloud-based platform, so that works really great. But just be aware that, during your planning meetings, have those discussions with the auditors. If there's something that has to be looked on site, have them on site. If the client's going to scan them and send them to the auditors, get that straightened out before you actually start the audit. And just lastly, I just wanted to bring up the ESSER funding. Again, a lot of our, we went from, we almost doubled our single audits last year from 2020 to 2021 because of the ESSER funding. Really look into that a lot. There's been a lot of issues, and we anticipate more single audits in the upcoming years through probably September of 24 due to the ARP ESSER. So there's some complications there with the ESSER. I'm sure CSBM will talk about those in a little while, but be aware that there's new guidance all the time. Keep looking out for the compliance documents, and reach out to your back office providers, auditors, and the state for additional guidance. That's it. So Dan, if you want to take over, talk in more detail about what we look for.
Okay. Thanks, Gus. Good afternoon, everybody. So I'm just going to cover a little bit about the auditor's testing procedures during the single audit. I'm just going to cover a little bit on what we look for in the CFA, how we go about picking the federal award or awards that are going to be tested under the single audit. I'm going to talk a little about some of the testing procedures done by auditors during the single audit and go over, excuse me, and go over some examples of some of the support that auditors are typically going to be requesting during the single audit. And finally, I'm going to talk a little bit about the consequences of material findings that are reported in the single audit. So the single audit testing really starts with the CFA. I always think of the CFA as the key that starts the single audit engine. We really can't begin our work with the single audit until we get the CFA. It's kind of a similar concept to starting the financial statement audit once we receive the trial balance, something similar to that. So the CFA, there's a lot of information on the CFA that's prepared by the client, by the auditee, as mentioned before. So that it's important to get the information on the CFA correct because it does affect our major program determination, which is our risk assessment process where we select one or more federal awards to be tested. And it's also going to affect our testing as well. And the CFA is also submitted to the Federal Audit Clearinghouse. So you do have the federal government looking at the CFA, and your state pass-through entity will see it as well. So I just want to emphasize that it's important to get the information on this accurate and complete. So just some of the things that the auditors are going to look for when they go over the CFA is that it's reconciled to the trial balance, like I said before. We're going to look for the correct grant name, the correct pass-through entity being identified, the state education department. For New York, it'll be the NYSED. One of the more important things is the correct assistance listing number. As Michelle said, this used to be the CFDA number. I guess with everything going on with the new CARES Act and everything, they thought, why not just confuse everybody a little bit more and we'll just change it from the CFDA to now it's called the assistance listing number. So they just kind of threw that in there for us. So, so the assistance listing number is very important because that's what the auditors are going to use to reference the compliance supplement so they know what to test. Correct pass-through identifying number. We're going to look for the proper identification of clusters for schools. That's mostly going to be the child nutrition. Again, we're looking that only federal awards are reported on the CFA. So if you receive like federal food, you may receive like a small percentage of state food as well. So that state food should not go on the CFA. It should only be federal awards, no state awards, no non-federal awards. Once the auditors perform our procedures over the CFA, we're then going to go through our major program determination process. The major program is going to be the federal award that we test during the single audit. So when we develop our audit procedures for the single audit, we're going to look to something called the compliance supplement that Michelle brought up before. Published document, publicly available. It's a very voluminous document, has a lot of information, a lot of history on the grants and recommended procedures for auditors to test. So when we start our testing, we're going to look at the grant tagging reports and the employee trackers to make our selections. And we can also, there's an option to perform dual purpose testing, just something I wanted to kind of bring up. It's something that we can perform dual purpose testing to kind of reduce some of our selections in the testing to make the testing go a little bit easier. For example, if we're testing employees for the payroll testing for the financial statement audit, we can also look at them if they're also a Title I employee, allocated portion of Title I on the single audit. We can kind of combine that testing to kind of bring down the number of selections that we're going to be requesting from the auditee. And then just a little bit on waste and abuse, something that came up from the new yellow book, the 2018 yellow book. Not much to say there, but it's basically something that auditors are looking out for is waste and abuse. If auditors do find any indication of waste and abuse, they may perform some expanded audit procedures around that. Okay, so when we test the major program, we're going to look at the compliance supplement, which has a list of 12 compliance requirements. So I'm going to talk a little bit about that. I'm not going to go into too much detail. I just kind of want to go over generally like what the compliance requirements are. So there's a total of 12 compliance requirements, and what those are guidelines for compliance really, and they're separated into 12 different categories. And each of the 12 categories will not be applicable to every federal grant. So we looked at the compliance supplement to tell us what's applicable and what's not applicable. And then from there, we base our testing on that. Once we look at the compliance requirements that are applicable, we then, using the auditor's risk assessment, we determine the compliance requirements that are direct and material to the major program. Those compliance requirements that we do deem to be direct and material are the compliance requirements that we're going to be testing. So we don't test all 12. We're going to be testing much less than 12. It depends on the program and our risk assessment, but it can be 3 or 4 around there. And just important to know, with the internal control questionnaire that Gus brought up before, there's going to be a separate section for each compliance requirement that we're testing that's direct and material in the internal control questionnaire. So like I said, I'm not going to go through all of these just for sake of time. The most common one that you'll see being tested is activities allowed and unallowed, allowable costs and cost principles. That's where we do the bulk of the testing around cash disbursements and payroll. With equipment, just want to say, if you are purchasing equipment, fixed assets with federal awards, there are some things to keep in mind about that. Federal guidelines say that physical inventory should be taken at a minimum of 2 years. But you just want to keep in mind that you also have to follow your financial policies and procedures and your charter agreement as well. Your charter agreement could have something in there stating that requiring inventory to be taken, every year, for example. So you want to look at that too and make sure that you're following that as well. So I won't really go into these items too much. Not too much to say here on this slide. Program income, charter schools won't really see too much of, in my experience. You could see that with like a food program. If a charter school is charging for food and is running a food program, then you'll see some program income. But in my experience, I haven't really seen that too much with charter schools. And subrecipient monitoring as well is not really going to be too common with the charter schools. Charter schools really don't grant money to other organizations. Are pretty much the end user of the financial benefits of the federal systems. Finally, just a little bit about what some of the consequences are if there are material findings being reported in a single audit. So some of the consequences could be having to pay back some or all of the federal funding that was received. There is a potential that the organization could lose out on future federal revenue streams as well. So it's not just a matter of paying back any questioned costs, but also they could be losing out on any federal funding in the future as well. So with material findings, obviously, would be reported in the single audit report. So Michelle went over significant deficiencies, material weaknesses, questioned costs would be included in the report. And the reports are, for charter schools, public documents, publicly available. So it's all out there. And organizations also required to put together a corrective action plan. The organizations are accountable to the state and federal government, and they are accountable for taking measures to correct the issues, the findings. So that's what I have for the audit testing. I lost track of time, but I hope I was okay. So I'll give it over to you. Thank you. Great. Okay. Okay. So we'll go over to problem areas with Tia.
Yes. Hi. So I'm going to go over a few of the key problem areas that we often see. The first one being the unawareness of the requirements. So just keeping in mind that the single audit is triggered when it's $750,000 worth of expenses spent during the fiscal year. Another key problem area is misunderstanding the compliance requirements. Reading the compliance is key to understanding if the expenses meet the purpose of the grant, which will be your allowable versus non-allowable expenses, and being aware of any stipulations. I know you've heard this mentioned a few times about internal processes, but a problem area obviously would be non-compliance of those things in your FPP. So you want to ensure that what's written in your FPP is exactly what's happening. And you also want to be aware of your purchasing policies for bidding and competitive quotes. Another huge area that we've talked about a lot during this call is expense tracking and tagging. Some key things that we see there is that tagging isn't being performed at all. Keeping in aware that the auditors do use tagging to make selections. We want to try to stay away from changing tagging and making sure that your tagging matches your approved budgets for these grants. You want to also try not to have an amendment filed for things that are not in your budget. And if you're filing amendments for multi-year grants, that they're not affecting your prior year CFAs. Also thinking of tagging when it comes to payroll, you want to ensure that you are not tagging for personnel and employees that are no longer employed with your organization. And then again, you want to be just conscious of tagging one employee to multiple grants. Next is the CFA schedule being prepared incorrectly. So I won't go too much into those. I think you heard enough of the different pieces that go into a CFA and all of the different components that you need to make sure are accurate. Pass-through money is, again, one that most charter schools don't typically see, but if a school is passing money through to another school, you should also be monitoring that funding. And lastly, insufficient supporting documentation. I would look at this from a standpoint in addition to financial documentation. You want to just be make sure that there's documentation for anything else, like ensuring that you have support for like your meal counts, for food claims, staff certifications, class and school schedules for students and things like that. I'm gonna kick it over to Lola, who will share some best practices for these problem areas.
Thank you, Tia. So some of the best practices is starting early. Create your CFA schedule July 1 or before that if you know what your federal grants will be for the fiscal year. The CFA is prepared for the fiscal year. I know ESSER and ARP funds are multi-year grants, but when you're preparing the schedule, it is for the year that you're spending it. This is a sample of a schedule that is prepared, finalized, as you'll see in the last column. It's based on expenses, not the allocation of the grant. And this is what is usually provided to the auditors. Most of this information can be found on the contract, on the final contract signed, where the assistance listing number is listed, sometimes the state project number is listed, and also which department, US department it's coming from. You will have in a year where you might not meet that threshold, but it's key to still maintain this and be in compliance, because you might not have a single audit, but there's always that surprise audit from the department or from the grantor of a performance audit. And from experience, I think I would pick single audit over performance audit, because those audits could last for months and they ask for a lot more. Other key in starting early is just tracking throughout each month as part of your month-end close, making sure you're recognizing all your expenses and tagging it to your grants, especially dealing with multiple grants, making sure you're not double dipping. But the other part is by end of March, a common practice is projecting out what you will spend by end of the year of your federal funds. Based on that threshold, you will see if you need to let your auditors know if you're going to have a single audit, because it is more time spent on a single audit in addition to your financial audit in the summer. One common thing that we have seen when calculating for that 750 is not including your fixed assets. Because fixed assets live in your balance sheet, Sometimes we forget to put that as part of your revenue and part of your total expenses for the federal awards. So even that little $50,000 purchase could put you over that threshold. And in the summer, you have to go through the single audit. The other piece is making sure your grant matches to your most current budget. If you apply for the grant a year ago and your needs are changing, please amend the budget, and tagging must match to the most approved budget that you have. And it also should match to the purpose of the grant, the expenses. So if it's a food related grant, so the expenses have to match up, and maybe kitchen staff or food costs. The other part is reviewing your internal process, reviewing your FPP and federal purchasing policies, knowing when you need to get a competitive quote versus when you need to get an official bid. A competitive quote, you could print it out from Amazon, from a catalog. Rule of thumb, either a quote or a bid, depending on the threshold, is 3 bids or quotes. A bid is when you officially get a vendor bid with the school's name and address of what they are quoting the cost specific to the school. Maintain all of that as part of your documentation, that the school had its due diligence of researching prices. That is key. The next part is about tagging. So I know Tia and during this presentation, we mentioned about tagging. It is multi-year pledges, grants for these ESSER and ARP. So making sure no changes once the final report is sent and all the funds are received. Same thing with audits. Once the audit is done, no changes to the spending. Designating one person, as it was mentioned before, that one person should be reconciling monthly the expenses tagged, reviewing if you're still following the spending plan for that grant, and also being the go-to person of communicating across departments of what are the spending plans, what can you spend on, what is allowable with this grant, what is not allowable, which is through reading the compliance supplements. The other piece about payroll, as Tia mentioned, about not double dipping, we have seen where, let's say, assistant principal was written in 3 different budgets, title, ESSER, and ARP, portion of their salaries to be spent on that. After the budgets were filed, the year started, we calculated the FTE as adding up to 1.5. FTEs cannot be over 1.5, it has to add up to 1, so an amendment was required. So definitely review your FTEs and make sure you're tagging based on the actual salary of the employee, not what is budgeted in the application. Also, as Tia mentioned, the employee has to be active. If the employee is on leave, on medical leave, or is not really performing the service because of a role reassignment, you cannot tag it to that grant. Same thing as, let's say if there was a grant where a yoga teacher is written in that grant, a yoga teacher must perform that service in order to be tagged for that grant. If the yoga teacher was reassigned to half of her time being a history teacher, you could only tag half of the time that she's teaching yoga towards that grant, unless a revision is required. If it's fixed assets, again, physical labeling, this was purchased with ESSER funds, ARP funds, making sure to have internal controls of knowing where your computer purchase, your copier, whatever was bought with those funds, where is it located, which room, which floor, who's using it, just to have that documented as part of your inventory. And the last piece is documentation. As Tia mentioned, we start our documentation on July 1. What's helpful for us is setting up an electronic folder, a separate one for federal, where we're adding on throughout each month all the expenses, all the payroll files, offer letters are requested, payroll certification forms that are signed monthly. Everything is maintained in addition to your regular documentation. And that wraps up our presentation. And we're gonna kick off our Q&A session.
Thank you all. That was wonderful and informative. And I do have some questions in the chat, so we'll go to those. First question was related to E-rate. Would that fall into the single audit? And then the EFC funding, does that fall into the single audit? So it's up to anyone to answer. I had added that E-rate was not part of the single audit. I believe that's correct. But please confirm.
So E-rate is not part of the program. ECF, there is some mixed information. if you're reading the guidance on ECF grant, they are saying it's subject to single audit, but if you're looking for the ALN number, you cannot find it. So maybe the government is a little behind on setting up that number, but we're still researching that.
Great, thank you. Next question, what if the employee is remote while most of the staff is in person? Does that affect the single audit? Any of the auditors?
No, that should not affect the single audit. So I think it was maybe Gus mentioned, you know, when you're looking at your internal controls, you certainly have to make sure that nothing's falling through the cracks just because people have moved to a remote environment. The controls have to all remain intact. So if there's a control that's broken because somebody moved remote, that's a different issue and there could be a finding. But as far as tagging that employee to a grant, if that employee is doing what they're supposed to be doing, just because they're remote should not affect that. But you really have to be aware of the controls that are in place and that they remain intact.
Yeah, and I'll add some of those controls, you know, could be, you know, some of those controls could be due to the the remote working and the COVID-19. So I think the FPP should be updated. And as long as that's documented properly, there's no issues with a single audit, whether you work remotely or in-house.
Great. Another question, please confirm that is this supposed to be IDEA? Is not part of the federal single audit calculation? It says DIEA, but I think that might be IDEA.
That's correct. IDEA is not part of the single audit calculation.
Yeah, it should not be included in the CIFA or the calculation of the 750 threshold.
Great, so no E-rate, no IDEA. Another question, we maintain our payroll files in one place. Should we need to pull payroll registers of employees that are being tagged separately? I believe part of the single audit, you will be requested to pull payroll registers. Is that correct?
Yeah, that's correct. Yeah, when we do the payroll testing, we're going to look at the payroll registers as part of the testing. So yeah, and any payroll registers for employees that are tagged, which is really, I guess would be really any of the payroll registers. Yeah, that would be all fair game for the single audit.
Great, thank you. Since the ESSER grants require a certain percentage of funds to be put towards SEL and learning loss, how will that be tested each year?
I'm not sure. I don't know the answer to that yet. I don't know if Dan or Gus has any input on that. So this is going to be new to all of us, and we're going to be waiting for some guidance to come out for testing. You know, I do think, you know, we'll be looking at the rationale of what the organization did, what their documentation is, what their controls are over that. I don't know if Dan or Gus has anything to add there.
No, I think we'll, you know, how we select the testing will just determine which expenditures that are tagged to that grant, which ones do we select. It depends on materiality. It really depends on a lot of factors. We just can't give a straight answer on that either. So.
Okay, thank you. Could you please talk a little about requirements and best practices for time and effort documentation?
I mean, I think maybe Lola or someone could speak on it, but from our perspective, with the time and effort, we look at, you know, it depends on the programs. We are asking our clients to provide us with time and effort documentation, which could be timesheets. It could be the one page that's allocated to multiple grants and how much of the individual's time that's allocated to grants. So we're not picky as far as the what type of documentation, but we need to know how their time is allocated. In the case of Title I, I think mostly it's Title I. And with Title I, we look at certifications as well, and the ESSER. We're looking at ESSER. So we've seen it. We've seen all different types of documentation, and we're willing to accept anything that's reasonable that makes sense to us.
Yeah, and I think
same. I was just going to say same with us, real quick, from an auditor standpoint. I think the federal guidelines made it a little bit easier for organizations to document their time and effort when they revamped the uniform guidance. So there are different options, but the key is has to be documented, and whatever allocation you're tagging, you're saying that person is working on that grant, that's what needs to flow through, and that's what we're going to look at. Sorry, Lola, go ahead.
Sure. So what we use internally with our clients is July 1 hits, we create one form. If it's an individual where one full-time equivalent is allocated, let's say all to title, that form could really be signed annually, where you're just stating the employee's name, 100% of their time is spent on Title I, and they sign off and you're done. I would suggest to check that each month to make sure if the person is on leave or if anything changes or a role is reassigned. On anyone that's below 1 FTE, that same type of form is signed once a month. So for example, if we have one individual working 25% on ESSER, another 25% on ARP, it's all on that form. It's like a little chart where it shows 25% on ARP. And every month on that form, there is a signature line for the employee to sign for July through June, that they're aware that portion of their funds are covered by federal awards.
Yeah, especially with the ESSER funding, I agree with Michelle. I think the federal government is being a little bit more lenient on that, and we were being more lenient because of some of the complexities around that program. For instance, ESSER 2 came out with some compliance, and that allowed the schools to go back to 2020. So you didn't know back in 2020 if you had to do this, so you didn't do any time in billing back then. So we allowed them to go back and do that work if they went back and allocated expenditures back from March and June of 2020. So they're being a little bit more lenient, but now we've had a year under our belts, so it's back to where we were, I think, with the requirements.
Great. Any more questions?
I think everyone on this call probably knows this. I just wanted to reiterate federal funding versus state funding. We talked a little bit about that, and Dan mentioned, there could be state funding in the school program that does not show up on the CFA. If there's federal money that is passed through the state, that is federal funding. So you just have to be very careful. If you're saying, oh, that money's coming from the state, it could be, but as you know, a lot of federal funding is coming from the US Department of Ed through New York State Department of Ed, or maybe through any state ed department. So just be very careful about that. That pass-through entity, so New York State Ed, for instance, should be notifying you that it is federal funding. They should be giving you the AL number, the assistance listing number. So it should be very clear on the contract, on the documents, but just be aware that most federal funding is passing through maybe a state agency, but that is considered federal funding.
Great point. So we're coming back to IDEA. We were told by our auditors last year that IDEA is now required to be included in the calculation of federal grants. I think, yeah, we're still at the same point where it's not.
I think it depends on the state. So I know in New York State, one of the audit guides, I think from SUNY, has it written that IDEA is not part of the federal grants for the single audit. But I think in Connecticut and Jersey, it might be part of the single audit.
So it's state specific.
Yeah, she's saying.
I just want to jump in here and say, I do not think that this is an authorizer designation, whether IDEA is or is not part of a federal audit category. And so, Annalee, I would say if you're in New York, you should absolutely email Mike and I, and we can follow up with you. And if not, you should reach out to your state association or your state ed office. But I do not, there's no way that a state authorizer is making a designation about what is and is not an eligible revenue category or expense category for a federal single audit. And sorry, excuse my hoodie lifestyle here. I've been off video. My kids all have COVID, but they're fine. So just try not to distract from the, yeah, thank you.
Thank you. That's a good point, thank you. Any other questions regarding the federal single audit? All right, Michael, should we?
Guys are coming in right on time, organized as I would expect. Yeah, I think we can close out. If there are no more questions, I do just want to point out that my email is in the chat. Feel free, if you have questions as follow-up, please feel free if you're on this call to give me an email and we can get you some follow-up questions answered. But turn it back to our team here to just do a final thank you, and you have their contact information on the screen as well. Well, once again, thank you all for joining us. We appreciate being able to host a forum like this, and hopefully it was instructive as you move forward in your financial processes. We hope you have a wonderful rest of your evening. Take care, everyone.
Thank you. Take care, everyone.
Thank you.